Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. Okay, so crypto this week. What did we have? We've had an extremely quiet weekend. After a week close on Friday, we had a brief drop down to 60K. And that was just bought back in early Asia hours after the weekend. The rally has kind of kept the futures basis rates and open interest elevated, while the daily funding rates have normalized. So daily funding rates, perpetual funding rates have normalized from high double digits. But, you know, we still see some fragility in markets, because if you look at the increase in the leverage open interest, then there is a bit of a likelihood that retail money has piled in. And so there might be some more leverage to be flushed out, basically. Okay, but can't deny that the ETF launch on Bitcoin was a success so far. They've kind of hit $1 billion of AUM within 2 days, which basically beat what GLD did when it launched. So, you know, I think making the crypto space more accessible to a broader universe of investors is clearly a long-term positive. That doesn't necessarily mean we don't need to consolidate a bit now. If you look at this price action in Bitcoin, that was a 40K to 66K move pretty much in a straight line. So the way markets move, you should expect some sort of correction. If that's a leg A to the correction, that's a B. I wouldn't be surprised to see a C wave correction down to around 57. That's my minimum target that I think we need to kind of get to think we've had a healthy consolidation of that move higher. And then maybe we can stage our rally into November or whatever that we're all looking forward to in terms of the seasonals. So that's kind of how I see it. We may not get that pullback, but I'm kind of de-risked a bit to kind of be able to have ammo to then add into that pullback, basically. That's how I'm trading it. Ethereum's got an upgrade on Wednesday. It's the most significant upgrade since August London hard fork. This one focuses on the beacon chain, which serves as a foundation to Ethereum 2.0, on which investors would stake ETH, basically, right? So sounds quite important in terms of, you know, the big bullish narrative for Ethereum is about this merge that's going to come up, and this proof of stake change that's going to come up sometime in Q1. So, you know, I don't know, this upgrade is going to be a stepping stone towards that. So that may be a catalyst for ETH to like have some kind of move. So keep an eye on that. And then the other headline, 2 US banks, New York's Five Star Bank and California's Unified Financial Credit Union, are offering Bitcoin trading through a platform created by NYDIG and Q2 Holdings. So they expect 450 banks and credit unions to be offering Bitcoin to their clients by early next year, right? Strong signal to that financial institutions are embracing the space, because they see that incoming demand from their clients. They want a part of the action. They don't want the clients just to go directly and buy a load of coins and self-custody them, basically, right? Clients will also have access to the platform to educational content on Bitcoin and blockchain, which is just good for general crypto awareness, right? So as more institutions embrace it, they offer more education around it, and more people become aware, and the adoption curve continues. And, you know, Raoul Pal's kind of vision of, you know, adoption going from 200 million to a billion in a few years is very much becoming more likely as that happens, basically. So anyway, so that's what I'm seeing headline wise, what I'm seeing technicals on Bitcoin. In terms of Ethereum, obviously it stalled a bit. It broke, you know, I was looking for it to break 4,000 and really charge, but it kind of very briefly touched nearly 4,400, but it stalled again, right? So it's going to move in lockstep with Bitcoin to an extent. If we do look at, like I said, that upgrade might be the catalyst that it needs, but momentum has definitely subsided a bit. If you look at the momentum indicator rolling over, if we look at the cross, Bitcoin ETH cross was looking very heavy last week, this time last week, but it's had a very strong bounce, right? It's bounced from kind of low, sort of high 0.05s to 6.8. That's healthy, right? It's about 15 to 20% bounce on a relative basis, right? That's strong. I mean, it's kind of broken this downtrend here. I know it's not overly convincing break to me just yet, but if this thing keeps going, then it targets back up here at 0.08, right? Which is another 15% odd outperformance of Ethereum, right? So look out for that. I mean, that bounce here was more of a 10% outperformance, sorry, that rally last week. But like I say, if we're going to target the top of this range, then we're looking at another 15%. So that might be what we have coming, basically. All right, so that's the technicals and on the majors. In terms of on-chain, what's been going on chain? So CME futures volume and open interest has absolutely exploded. No surprise after, you know, the ETF launch. So if we look at sort of perpetual funding rates, what's that saying? Reached local highs as prices hit 66K last week. Obviously, that's a sign of a bit of excess leverage needing to be flushed out. Very typical to see spikes in the funding rate just before we see a correction. Those funding rates have now normalized to levels that we saw more in early September, but we still saw a correction and a bit of a flush out even from those levels in early September. You see here in early September, price kind of did have that flush out and we went into the red on funding rates. We're yet to see that this time round. Suggests that there may still be some room for a correction. That's where we might get our C wave. We might get our correction into those 57,000 area, and then you might see a bit of a flush out of some of this leverage, some more to go, basically. Yeah, so that's what I'm looking for. On a more positive note, crypto margined open interest has been declining. So obviously Deribit, for those of you who trade options like me on Deribit, that's all crypto margined, isn't it? Right? We have to put our crypto down. And the point is, the dollar value of that crypto margin is extremely volatile, right? It's a 100 vol asset. So when your collateral is also a volatile asset in itself, that just means your whole space has got kind of more risk associated with it, right? So the fact that crypto margin open interest is collapsing because people are putting stuff on CME where they use dollar collateral, right? Or they might be putting collateral as stable coins on certain exchanges. Then that kind of starts to de-risk the space a bit because the collateral that's underlying all that leverage becomes a more stable collateral. And so that takes potentially some more risk out of the system, basically. That's the idea, right? So we've seen a drop from April this year of 70% down to like 45% in terms of how much is crypto margin leverage. Yeah. And then obviously, in terms of what we're seeing on chain, in terms of the age of coins and what long-term holders versus short-term holders are all doing, obviously we keep an eye on all that stuff. And that is showing us that after a long period of accumulation, you know, the young coins have kind of started to grow, basically, right? So what we're seeing, you know, long-term holders spending a bit. But if you look at kind of back to earlier in the year, that's not necessarily a bearish sign, right? So we saw the beginning of the bull run last year from November, December. We're starting to see these younger waves are building as the long-term waves are getting smaller. but that's where you get that real acceleration phase where you start to go steeply upward. Okay. And it's only when, let's say, the young coins are accounting for like around 50%, that's when we kind of saw the first correction come, right? So I think there's a way to go, right? If you see here on the far right of the chart, the young coins are still a relatively small proportion, okay? I think if we start to break 70K and accelerate, we're going to see more and more of the young coins accelerating. The long-term guys are going to start being happy of letting stuff go. And when maybe once we get into that 80 to 100K range, if we get there by the end of the year, that's going to be the setup where you're going to see this hodl wave chart kind of confirming that there's a lot more risk of a correction, right? And that's what I'm thinking. For me, it's not particularly concerning right now, this hodl wave. Yeah. Okay, so that's the on-chain stuff of interest. If we now switch over to vol, what's been going on in the vol space? So realized vol obviously fallen off a bit of a cliff. So if I bring up Bitcoin, realized vol is, where is it? Implied and realized 7 days. So you can see 7 day realized in the mid 50s again. And obviously as a result, all the implies have kind of come in. As you can see here, the longer dated implies kind of stayed pretty stable, whilst the short dated implies have collapsed. Maybe that you can see that a bit clearer on the term structure chart, where over our last week, bring 2 weeks and last week, you can see here, 2 week doesn't really help us. So here you can see March, June, pretty stable, haven't really moved. December's down around 5 vols, November's down a bit more than that, around 7 vols, and then the front is absolutely crushed at 10 vols plus. So absolute crushing of the front end, because that's where the gamma is, that's where the time decay is. When realized vol goes into the 50s, it's the front that gets whacked, right? So we've gone into a steep contango, as we often do in crypto vol, in Bitcoin vol. Now, call volumes do continue to dominate. So, you know, the big sort of volumes we saw in the last week have been around that 5th and 12th of November expiry in the 70,000 strike area. You know, we can kind of show that in the open interest where we bring up November expiry. There's a big spike there around the 70,000 strike. Okay, 70K, big strike for 5th of November. And then in terms of December, we're seeing higher strikes, right? Around 90K, 100K, 120K in regular November and regular December expiry. That's kind of where we're seeing the action, but it is generally still skewed to the call side, around 60%. Okay. If we take a look at what Skew's been doing, which can often be informative to see what's going on under the hood in the market in terms of expectations, well, we're definitely seeing a clustering of skew. If we go outside of the 1 week skew, which is the super short dated skew, which is more neutral, which is closer to zero, we can see that all the other skews are just kind of hovering around 4 to 5 vols, right? So to me, that's just suggesting that the market's got a strong bias towards upside across pretty much all time horizons, right? So even November, December time horizon, people are pretty confident we're going to be higher. Whereas literally in the 1 to 2 week time horizon, there might be a bit of a pullback opportunity, right? Which is kind of what I'm saying as well, right? I'm expecting some sort of pullback into 54, 57 at best before we go on another run. And I'd say the skew surface is kind of echoing that sentiment. Yeah. Ethereum flows have also remained very skewed to the call side, around 80% to 20%. If we bring up this chart, which I love, from Genesis, which is the block sniffer, this basically keeps an eye on all the paradigm blocks that go up, where the big chunks of risk are moving. And you can see basically we're looking at 26th of November, around that 5 to 6K strike area is where there's been a lot of volume. And then after that, we see in the December end of year, we see it in the 9 to 10K region with those big pink bars, right? So that's where the concentration of flow has been in the big blocks in Ethereum lately, right? And we would suggest that that's probably buy-side flow, given the setup for Ethereum and given what the call skew in Ethereum is very pronounced. So that kind of confirms that that's probably to the buy side, that flow. If we bring up the term structure on Ethereum and compare what it looks like relative to Bitcoin, you know, the term structure has actually kind of steepened, but with the Vega part of the curve actually rising even more. So we had said last week, we were seeing a lot of demand for those March upsides that were recommended in the 15K area. So that March has continued to trade higher. So over the last week, that March is up another 6 or 7 vols, whereas the front is actually coming lower. So you're seeing steepening on both levels. You're seeing like a pivot point kind of around that November area, where anything beyond November is going up and everything shorter than November is going down, and November itself is staying quite stable. Yeah. Now, obviously, I've been flagging this as a massive fade, and I strongly believe, you know, it is. I think it's a really good vol arb opportunity to be buying things like November 30, 40 delta calls and selling March upside against it, which is ridiculously expensive. Now, you've just got to be careful, right? That vol differential between those strikes is approaching 40 to 50 vols now, which is an insane number. But the fact that it's got this insane means that it can potentially get worse, right? Because it's the reason why that March is trading so expensive is because there's a structural supply shortage there, right? No one wants to sell it because there's just only buyers of it and no one wants to sell anymore, which is why the price got up here. There will be a point where those options will just decay on 150 vol. They will have to go down in price. Even if the vol stays at 150, they will decay. But remember, right now, they're March options, which are a good, you know, 5 months out. 5 months options don't have to decay that fast, right? So just be aware of that. If you're going to do that vol arb trade, size it appropriately that you can stomach another 10 or 20 vols in your face if that keeps going higher, right? I still think in a rally, your November, or even if it doesn't happen by November, your December upside is going to perform a million times better than that March is. But in the absence of anything happening, you can get a situation where your November's decay, your Marches keep staying bid or even go higher because that implied vol is in demand and the trade can still work against you. So sizing is key. Don't put it on in such size that's going to blow your account up if vol goes up another 20 points in that March expiry. That would be what I would say. Yeah. What else? On a final note, we've got a big expiry, obviously, this week, end of October. You know, it counts for a reasonable chunk of the open interest. What do we see happening? If we bring up Bitcoin, you've got the gamma profile for those who kind of like looking at that sort of thing. The gamma profile is pretty uniform, in my opinion. There's not... If I bring this up, make this bigger. So you can see you've got a strike around 60K, and then you've got a big strike around 65K. So in this sort of 60 to 65 area, I don't anticipate that there's going to be, you know, that much going on. I think we could quite easily kind of just gravitate towards 60K, which seems to be the biggest strike. You've also got the max pain point, which is down at 54,000, right? Now, we're quite a ways away from that. So I don't really anticipate we're going to get all the way down to 54. But just bear in mind, because that max pain point is on the downside, we may struggle to get far away to the upside between now and expiry this Friday, right? So reasons to think why that sort of consolidation move that we're expecting down towards 60 or high 50s might make sense given the options set up in the market as well, basically, right? So that's kind of how I'm reading that. The trade that I've been running on Bitcoin for a couple of weeks now has been the Oct-Nov call calendar. I've been short the 68,000s. I've been long the 70,000s in Nov. I've been short more of the Octobers to get a bit of extra premium out of those because I thought that vol was elevated and I didn't see us smashing through 70K by October. That seems to have worked out okay so far. I'm kind of sitting on it for now, but when that front strike in October expires, I'm going to have to make a decision on whether to just run my Nov calls or turn them into a call spread or do something like that, basically. But I'm kind of monitoring that haven't really made a firm decision on what I'm going to do with it yet, to be honest, right? If we do start to break down below 57, I might just dump it just because it's made money and I don't want to give all the money back, basically, right? So that may well be what I end up doing, but it's going to be a bit of a function of price action and what goes on. Yeah. Okay, that's it for me in terms of crypto. Anyone want to ask any questions? I'll take you through my trade spreadsheet if you want. We can discuss what I've got going on in there. But yeah, over to you guys. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.